Welcome to Commercial Real Estate Pro Network's CRE PN Radio. Thanks for joining us. My name is Jay Darren Gross. This is the podcast focused on commercial real estate, investment, and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today, my guest is Manny Renteria. Manny is a 15-year veteran of the solar industry and has been designing commercial solar systems for over 8 years. He is the founder of One Up Solar, an industry leader in residential, nonprofit, and commercial solar installs in San Diego, and they are expanding their reach to the entire country. And in just a minute, we're going to speak with Manny about the opportunities in solar for real estate investors and specifically more commercial aspects. But first, a quick reminder, if you like our show, CRE PN Radio, there are a couple of things you can do. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We love to hear from our listeners. Also, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Manny. Welcome to CRE PN Radio.
Thanks, Darren.
Well, Manny, I'm looking forward to our conversation today. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Well, my background is mostly in electrical and electrical engineering, which is why I got into the solar field, I guess. Prior to joining one of the top solar companies in the world, back then known as Solar City, I was a commercial electrician, and prior to that, a residential electrician. And I'd also worked on wind turbine generators and things like that. So my passion comes from understanding electrical transmission, distribution, and troubleshooting. So when I first found out what solar photovoltaic cells are and what they did, I was just blown away by the fact that I could now, offer folks the value of producing that power on site versus having to transmit it through transmission lines and things like that. So that's my background. A family man out of San Diego, and just proud to be an electrician in the trade.
Awesome. Well, I'm excited to talk to you about solar. I know it's been something that's always appealed to me ever since, the first time I remember hearing about it in probably grade school or something like that. In just the product itself, can you talk a little bit about, the product and you mentioned the cells and how they've improved in the last, and I don't know how far back you want to go, because I'm sure there have been leaps and bounds, but just in the recent past, if you could talk a little bit about the product and how it's improved.
Certainly. So the first batch of solar panels that I encountered were back in 2001, and I was actually on a tract home build, and we were wiring the model homes for a tract home development, and there was an electrician on site that had these modules, and they were probably 2 feet by 4 feet, and there was they had like 2 pallets of them, and I took a look at them closely, and they were manufactured in some warehouse here in the United States by hand, and they were only rated at 25 watts at the time. So the system itself really didn't cover the entire home's energy demand, so to speak. So, but it was a cool technology, right? Just to know that it existed. Now, fast forward 7 years, when I actually got into solar myself and had had hands-on experience in designing and installing these panels. The modules by then, the solar cells, which are the solar panels, are actually a group of cells that are kind of wired together by conductors. And so when you see a solar panel, usually it has about 60 or more cells. So these cells were now rated at around 175 watts. So 25 watts to 175 watts over 7 years.
And
Now
that's
fast forward
per
another.
cell, per cell
No, well,
of the
per per
panel.
packaging of cells. So
Okay.
per packaging. So the when you see a solar panel, the traditional solar panel that you see on a home, that's going to be usually the standard size of packaging. And so as the years go by, efficiency inside of each cell increases about 1 to 2% per year has been the average. And it's had a kind of a drop off over the last few years, where the cell efficiency has kind of leveled off, and now we're seeing in commercial, especially, modules that are rated upwards of 450 to 500 watts now. So huge bounds and leaps to get where we are today. And so now with one solar panel, you can power an entire kitchen, whereas before you needed like 10 of them. So yeah, technology's come a long way. It's not going out of control, to the point where, oh yeah, in 2 years they're just going to be this big, and one cell is going to take care of an entire apartment building. That's not going to happen.
Right.
But the
Well,
growth has been tremendous.
just the progression to where you may have needed like yours and your neighbor's roof to power your house, where now you can get it done with part of your roof being covered. Is it's fascinating and impressive just to see the real practicality and the opportunity there. So the basic is the cellular, or not cellular, but the solar panels, that basically the kind of the foundation of what you guys do as far as or I guess the energy collection. Is that where the primary kind of the starting point for the collecting the energy from the sun?
Yeah, so that's going to be the only source of incoming power that we have in our systems. And from there we have inverters, which condition and convert the energy to usable energy, the sunlight energy to usable energy. And then you've got batteries that store the power and distribute the power during different times of the day. So yeah, in fact, the solar panels and the solar cells themselves are responsible for attracting that sunlight and converting it into energy.
Got it. So going from the 25 watt to the 175 watt panels, um, how somebody that has one of these installations on, let's start with a residence, are you able to essentially be off the grid for the average homeowner?
That's a great question. The possibility or the feasibility in going off grid is available. It's a thing. It's not really cost effective to be off the grid today, and for for as long as I can remember. Solar in the marketable residential and commercial space has always been grid tied. And so what that means is that your solar PV system that generates all the power that you need in your household, in fact, is most of the time is going to be grid tied. Why? Because storing energy can become really expensive, and not only storing it, maintaining the storage batteries and having enough storage battery capacity, to weather any type of ongoing cloudy days. For example, I don't know, let's use as an example Seattle, where you have days and days and days of no sunlight or low sunlight, or even Alaska, or even in California, we've had days where 4 or 5 days there's not a lot of sunlight. So what happens is, if you don't have an autonomous storage system that could take you through these 5 days, you're going to be left without power. So it's not really a good idea to be off grid unless you're living in a cabin up in the woods where there's really no access to grid voltage and communication. And then that's where you can really become much more efficient and find electrical devices like light bulbs or even refrigerators that are powered directly off of DC power and doesn't require you to store the energy. And you have to live a very minimalistic sort of consumption life
Right,
to
right,
be
right.
off grid. So it's possible, not feasible.
So let's so I guess walk away from the off the grid, but just on the fact that you're generating power. Is it common now that when you generate power and you're not using it, that you're able to, I guess, supply the grid, or is there any kind of a uh, do you become a generator for the grid then?
That's a great question as well. So most utility companies across the U.S. They will sign this agreement called a net metering agreement with the consumer or the customer in this case. Most utility companies benefit from solar power because what happens then is you become a producer of power, and then you lend them out that power, which they can then turn around and sell it to the building next door or the neighbor for the premium price that they sell power at. And instead of you getting billed for it, you get credited for the excess power that you put onto the grid. Now, some utility companies in California now have enacted net metering 2.0 and are going for 3.0, where 2.0 now they're actually charging you a small non-bypassable charge. They call it NBCs, non-bypassable charges, to store the power on the grid. So now they're actually charging you a small fee to store that excess power and then call it back in the evening. And then they've got time of use rates and things like that where they have actually learned how to recover some of the losses that they've experienced with solar customers. But for the most part, yes, it's a one-to-one exchange. So you give power, they give you power, you give them power, but now they charge you a small fee, and it's a small percentage. I'm talking maybe 1 or 2% of what they'd actually charge you if it wasn't solar energy that you put on the grid, if it was just pure power that you're buying from them in wholesale.
Well, it's interesting. I'm just kind of curious. You mentioned that California, I think, has probably been more progressive state with regards to solar power. Have you found that most states are moving in this way, or are there any that have been resistant to you generating power and you know putting it into the grid or tying to the grid that you're aware of?
Correct. Yeah, so there are many states now that are on board with solar. There's a handful. I can name off a few: Texas, Nevada, Arizona, New York, New Jersey, South and North Carolina. Um, Georgia is now peaking, and Montana, Florida. I mean, just to name a few. There are quite a few states that are still kind of struggling behind. Um, but these new states have figured, and they're actually offering tons of incentives in some of these states, state incentives along with federal incentives, to deploy rooftop solar. And not only are there state and federal incentives, there's also production incentives, and also utility now are offering rebates as well. So I like in the Carolinas, I think there's a pretty significant utility rebate when you go solar, and I imagine it's because of the lack of energy sources around the area. So there's a lot of fields out there where people have big plots of land, and they're putting utility scale solar on there. So now they're putting solar in there, selling it back to the utility, and the utility gets to profit from that.
Yeah, no, I was going to say recently I've seen more and more of those, just kind of a field with panels. Um, and I didn't know if that was privately. owned, or if that was municipality owned, or how that was.
Mhm.
But it's impressive. I mean, when you see 100 acres worth of panels all lined up there, generating power. Um, so the basic is the panel on your roof, whether it be your residential property or commercial property. You are able to operate your facility from the power you're generating. Any excess, then you can have an agreement with the utility. Is that right? And then
Yep.
they kind of store it, and then you're not like unplugged, but you are getting some credit for your generation. Um, so let me ask you this. So we've talked about basically the the system or the hardware and stuff. Um, what's I guess the cost and the benefit, and kind of more of the what kind of a financial obligation is somebody looking at to whether you've got a 10,000 square foot building or a 100,000 square foot warehouse, or can you talk a little bit about how that looks, and then kind of ways that you mentioned some sort of the incentives that are available, or how these installations are being paid for or financed?
Yeah, certainly. Sorry. So in California, the easiest way for me to explain the cost of solar is comparing it to the cost of the utility power in terms of kilowatt hour or price per kilowatt hour. Because I can tell you $100,000, and that's not going to mean anything to you
Right.
unless you know how much you're spending or how much you're avoiding in the near future. And that's not some sort of gimmick. It's just the way it is. The way we calculate the levelized cost energy over 25-year span, which is the typical lifespan of a system, the minimum lifespan, I should say, because there's warranties in place. And so when you look at, I'll use California as an example. The rates here, especially in San Diego Gas and Electric, the rates for commercial power are roughly around 22 to 28 cents per kilowatt hour. Now, compared to residential, it's almost half of what residential power costs, or energy, I should say. Energy is a measure of kilowatt hours. And so 22 to 28 cents per kilowatt hour is what you're paying for electricity today. Now, when you deploy solar on your rooftop, and it really depends on the size of the building, obviously. If you have a taller building that has a smaller roof space and you have, multiple floors, then, solar panel coverage on the roof may or may not cover your full need, right? We're looking more for buildings that are, 1 to 2 stories, with a larger footprint where you can actually cover that rooftop and then realize the full incentive of going solar and the most savings. So in my building, right up above my head, actually, I have an 18 kilowatt system installed. Now below us, there's a restaurant. And then next to that restaurant is another restaurant. So we have, and it's us, and then next to us on the left here, we have another office building, and that's a real estate business. So we have about 1,200 square feet in here, and the real estate has around the same. So together, because the type of the business that we are, right? We consume light and we consume air conditioning, and that's pretty much it. We don't have multiple refrigerators and all these freezers and things like the restaurants have. So basically, the roof space that we have above our heads only satisfies the power consumption of the top floor, which are offices, right? So office space, retail space, things like that. That's where we see a huge feasibility. So the owner of this building, when I brought the project to them, because we pay the electric bill, I said, here, this is what we. So in a nutshell, we were able to cut down the cost of energy for this business owner, and the tenants, because we ended up paying the bill for it, down from 24 cents a kilowatt hour down to about 9 cents a kilowatt hour, or even 8 cents a kilowatt hour, because the owner is forking up the investment in it. And in the first year to 5 years, the owner will recover 50% of that investment through federal incentives, which is 26% tax credit. And then you've got the rapid accelerated depreciation, I think it's called, the makers, right? It's I don't know what the M stands for. I don't remember off the top of my head, but it's accelerated depreciation over 5 years. And then now there's another depreciation benefit that came through a couple of years ago. And so commercial business owners are recovering, more than 50% of the cost in the first 5 years. And then the next, the other 5 years that they're operating already recovered the rest of the investment by way of energy savings. So, after the first 5 or 6 years, everything from then on is just power that's being produced on the roof with a system that's been paid off. So, cash investments are definitely, if you have that type of investment capital, I would say is the biggest, the best way to recover your return, to realize return on investment on any system. So because your levelized cost of energy ends up being around 7 cents at that rate. So if you can compare paying 7 cents for power, over 25 years versus paying 22, 24 cents today, and then being susceptible to inflation and other things that utility companies usually stick us with every year, 3 to 4%, there's a huge savings spectrum. And so when you add financing in there, when you add interests, when you add, let me give you an example. We looked at a finance option for this building as well. And with interest and program fees and other things like that, the levelized cost of energy went from 7 cents from being a cash investment to about 12 to 13 cents in a finance investment. So when picking up investment financing, your levelized cost of energy actually goes up, but you're still around 50% in savings. Now that's for California. Other states, it's a little bit tougher when you finance your commercial project in a utility where the utility power is only 14 cents. Because then what ends up happening is the price that you pay for power today is going to equal the price that you're paying for your investment right off the bat. But what I like to really focus on and have my customers that I consult for focus on is the fact that they're getting rid of that expense and replacing it with an investment cost, no matter how much this investment is. If it's a little bit more or a little bit less, you're getting rid of a whole expense. So it's like renting your power versus owning it. So that's my perspective on financing and the cost. The costs right now are very, very accessible and affordable, obviously, compared to what it was years ago. And commercial, I can tell you commercial right now is going to cost anywhere between 25 to 35% less than any residential project. So if anybody's ever had a residential bid for their home, they can expect to see, 25 to 35% lower cost for their commercial business because of the size of the system.
Gotcha. And you mentioned kind of the base rate for California, 22 to 28 cents for the commercial. Do you have, or I mean, I would assume based on just the recognition of the benefit, that states that have higher cost power would be kind of more of a target opportunity, just from an initial easy to see the benefit kind of thing. Are those states easy to identify? What states that stand out?
Yes, states that stand out to me are going to be California, Maryland, and New Jersey. Those are New York. So those 4 states, and Massachusetts. Sorry. So these are all states that we're experiencing power over 18 to 19 cents per kilowatt hour.
Gotcha.
So, yeah.
And And if I understood right, the payback on this was roughly 5 to 10 years, based on the California model you were talking about, as far as the cost to invest, and then you said
Hmm.
50% back in 5 years, and that was just, if I understood right, that wasn't even talking about the reduced or the actually you'd said about 50% in 5 years, and then I assumed the balance in another 5 years. So 10 years payback, and then after that, you mentioned the systems are good for 25 years. Is that kind of the expected life? So you've got 15 years of controlled cost of your power at a reduced rate. Remove,
Hmm.
and you're out of the susceptibility of the increases from the power company. Correct? You kind of lock in your
That's
cost.
correct. Yep. Yes,
So
yes. Now, that's California. I think it'd be anywhere between 4 to 6 years for a full return on investment. Only because 50% of that is coming back through incentives. The other 50% is coming back through energy savings.
oh, I
And
got you. So
so, yeah,
there's both. Okay, I knew there was two parts to that. I just didn't.
yeah,
So you've got the incentives plus the reduced rate, and the reduced rate is
mhm.
something you'll carry on for the life of the system, right?
Yeah. So once you realize your return on investment, which again, California can be 4 to 6 years, there's no cost of power after that. Everything's paid for, done. In fact, most every power system that we develop and consult for comes with a 25-year craftsmanship guarantee. Um, it's more of a operations and maintenance sort of a warranty that covers any manufacturer defects, um, that covers any malfunction of the system, that's just unexplainable. But anything having to do with like real world conditions, like I don't know, say a hurricane, or a tornado comes by, or hail. Even hail doesn't really cause a lot of damage. It'll damage the roof before it damages the solar panel, ironically. But so that's what we look out for, is usually something that comes with a full plan and coverage, maintenance coverage over 25 years, because that's one of the biggest concerns, is like, now it's on my roof, who's going to take care of it for the next 5 years? So to finish answering your question, again, that's going to vary by state, and I think if we look in the states where you have the lowest cost per kilowatt hour, utility wise, your return on investment, you're looking at around 12 years at most. So from 5 to 12 years can be the the window, I guess you can call it.
Right. But even as the system outlives its, or you get to the end of its life, I'm
Mhm.
assuming would the I guess the replacement, would it be a full replacement, or would it be just more of like significant parts like the panels, or I mean, because you've got, I'm guessing there's some infrastructure or some capital improvements you have to do just to make the system plug into your building there. Is that, I mean, does that make sense? As far as I'm assuming, like
Yeah.
some of the wiring and stuff, you wouldn't be necessarily replacing that. It'd be more of the panels, maybe some key components, kind of like a.
Great question. Actually, what's great about solar panels is the fact that there's no moving parts. And so when you talk about or think about huge ticket item that need to be replaced maybe once or twice throughout the life of the system, depending on the type of system, there's only two. There's systems that have micro inverters in every panel. And so typically what happens with those little micro inverters is you have to replace one or the other every other, every so often. You have to have somebody out there replacing one of these components. And you can have 100, 200 panels on the roof, and you probably have two or three malfunctions every, 2 or 3 years. And so throughout the life of that system, you'll have somebody out there 25 times replacing these little components. But it doesn't shut the entire system down. Whereas when you have an optimized system that has a central inverter, and there's differences between the two, and I'm for both. But the one with the central brain, for example, the central inverter, will typically need to be replaced somewhere around 12 or 15 years. And that's a, it's a 4 to 5 hour, just replacement. And so your system is down for about, half of a day while they go and they replace this big component and it's back up and running. And so those are the kind of things you need to weigh out as it relates to, full system maintenance. And then solar panels themselves, there's panels out in space. I'm sure you've heard this reference, right? You got satellites and things like that. It's got solar panels attached to them since the 1950s and 1960s. They're still out in orbit. So, I mean, solar panels themselves is just, a cell that's glued to a piece of glass and it's on there and it has 2 wires on it. And that's basically all that is. And so those things can go forever. Really, the performance guarantee is what runs out after 25 years. So after 25 years, you no longer have that coverage that your system has to produce this amount of this amount of energy, throughout the 25 years. And there's degradation and things like that. But once you lose that warranty, it doesn't mean your panel just dies out. It continues to work, but you probably will need to replace the electronic components every now and then.
Got it. Got it. No, the no moving part certainly is, um, something I would like. I mean, just from a standpoint, I mean, it seems like the things that turn around and that move, they tend to have some sort of a bushing bearing or something like that that's due to squeak and become a problem.
Yeah, definitely.
Um, Let me ask you this. So if somebody has an office building, say it's like, I don't know, say like a 20,000 square footprint, um,
Mm.
they get a system installed by you guys, and they're able to show energy savings. Is there a transfer to the bottom line as far as the value if you were to sell your property? Is there a market recognition of the system that translates to increased value?
Yeah, I mean, if the system is paid off, then obviously you can calculate using the software that the system is equipped with. You can see exactly, how much power this system has produced in its lifetime, year after year after year, and you can see and measure the degradation. And so once you measure how much power this thing is capable of producing every year, you can actually calculate that into energy savings, and then calculate that into the future. Let's say year 10, somebody transfers this building, they transfer over the system, and they give you this full report. It says over the last 10 years, this system has produced, 15 megawatts of power, avoiding, this much in utility costs, which can be, 10 times what the system actually costs originally. And so, and this system still has a 10-year warranty. Here's the contractor's number that's responsible for the servicing, and this is how much this system will then save in terms of energy, right? So you will not have this expense moving forward. And then after year 10, the system's already paid off. So there's really not a big, I'm going to hike up the price of the building just because I have a small solar system on here. I think it really affects the sale of the property. It does help it, and some if there's still some sort of loan or a lease on it, then it's easily transferable. Most of the time, once you show the benefit and the savings and what this, if there's a loan payment that that's equivalent to 1/4 of the cost of the actual power that the utility would bill you for, and it kind of sells itself, right?
Right,
So
right.
there's something I did want to mention, with different building types. The bigger buildings and refrigeration, like liquor stores and things like that, it really, when you become a high energy consumer in the eyes of the utility company, and residential, you may have experienced this where you use more power. You jump into a higher tier, or they bill you more at certain times and things like that. Same as for commercial. We have time of use rates, which bill customers, at a higher rate at certain times of the day. And that's obviously to recover a lot of the losses that the utility companies have experienced. And so they also have this other charge that only commercial customers I've seen um, are actually being billed for, and those are called demand charges. And for years, it's been this constant battle between the solar industry and utility companies to kind of figure out ways to to mitigate that demand. So what demand charges is really simple. Let's say let's say you have a few air conditioning units on the building. All these air conditioning units are programmed to turn on at the same time when the temperature hits something. And then what happens is the entire demand of power spikes up, and you're drawing a lot of power, and all of a sudden that wire that brings the power in is saturated with power, and there's all this power coming in. And so the easy way to explain that is if you have a huge traffic of power coming in for any 15-minute interval, and it exceeds that threshold that commercial buildings are sort of set at. I think it's like 20 kilowatts or 20,000 watts at a time over 15 minutes. You get hit with these charges, and then once you become a customer that gets demand charges, then that's every month. Now they're looking for that demand charge every month. So you can actually avoid being on that by doing these things inside the building, which are energy management devices. You can program your HVAC units to do different things at different times. Same with refrigeration. If you can isolate, all the condensers and things like that kick on the refrigerators, if you can program those at different times, then you can avoid these demand charges. Because one thing about demand charges is they're really difficult to get rid of, and you can't do it with solar panels most of the time, because the solar panel. I'll give you an example. If it's a cloudy day and you're a demand customer and your solar panels are only producing at a quarter of the rate that they're supposed to be producing because it's cloudy, and then for some reason your demand kicks up, now you just got this huge charge for the month. In a 15-minute interval, you can have a $2,000 or $3,000 charge.
Wow.
And that's because you've used this much power for this long, and that's a penalty. It's basically a penalty fee. And the only way to avoid those sometimes is with large battery banks, capacitors, or there's even gas generators that some that some buildings are installing in order to avoid, because you got buildings that draw in 100,000 watts of demand, and they get billed 200 grand in one 15-minute cycle. And so there's different ways to sort of just get in front of that or get away from it. You just have to be very strategic. And that's what we like to look at all these aspects, right? So with your utility, we have this link that we send out to our commercial building customers. It's a utility API link, and what that does is we can pull their full energy profile over 5 years, and it gives us minute by minute data so that we can understand how this building consumes energy. And then we can kind of target and say, hey, here we can actually put in some devices instead of putting in a battery, instead of putting more solar panels. We can actually convert everything to LED, put in some controls here and do this and that, and then reduce and make the building much more efficient before they produce the power that they need. So that's really important to do. Energy
More,
efficiency.
more of a global approach as opposed to just to replace the source, but look at the demand, kind of thing. I like that. And even like you mentioned, just leveling off the demand to where if you can, space or instead of having all the compressors kick on at the same time, have them sequence or whatever to where you can level that out. That makes a lot of sense.
Right.
Yeah. So let me ask you, what's an ideal prospect for solar as far as in commercial type applications?
Interesting. So we work with organizations that are nonprofits, places of worship. We've worked with all the spectrum of nonprofit, whether it's an HOA, which an HOA still kind of generates revenue but doesn't pay taxes or something like that. But then you have houses of worship, and so we have all the nonprofit sector that we can help now, because we have programs that help them, even though they don't have a huge tax liability and they can't necessarily monetize the tax incentives and the depreciation. There's tax equity partners in these funds that can actually do that for them. And so what ends up happening is, for the first 7 years, these tax equity partners have a fund that owns the system, right? And the funding is based on the net cost of the system. So after all the incentives is what the customer or the building will finance, because the equity partners and take all the tax credits and things like that the nonprofits can't. So that's one. Obviously, private businesses, any private business that is established, that has a good track record, will qualify for funding. Anybody that has, that sees the value in producing their own power and being independent. If you own a piece of land, and power is getting into that land, whether you have tenants there, or whether you have your business there, or you have nothing there, and there's no power coming into it, you can capitalize on just the fact that you can produce power on that piece of land and sell it either to the utility company. You can sell it to your own business. You can sell it to your tenants. So really, there's a huge market for power. And I think the most overlooked type of business are retail spaces where they have tenants, or tenant occupied buildings, where let's say, for example, you have a tenant that has a 10-year, 15-year lease in that building. That's a perfect candidate, because there are now programs that tenant can qualify for, as long as they have a commitment to be in this building for a certain amount of time. Then they can make the commitment in saving the money, and putting up a system that's going to save them money. And at the end of the day, when that lease or whatever agreement is done, and they're moving out and someone else is moving in, the property owner gets to keep that system. So and the tenant paid for it. So there's really some opportunity, and we can get really creative, as it relates to this. And I just the ideal candidate is every building that has the space to produce the power that it needs to sustain itself, or to sell it back to the utility, in this case, for a small profit.
Got it. Hey, Manny, if we could, I'd like to shift gears here for a second.
Sure.
Um, by day, I'm an insurance broker, and I
Okay.
work with my clients to assess risk and determine what to do with the risk. And there's three strategies we typically consider. We look to see if we can first avoid the risk. If that's not an option, we look to see if we can minimize the risk. And then
Hmm.
beyond that, we look to see if we can transfer the risk. And that's what an insurance policy is a risk transfer vehicle. And I like to ask my guests if they can look at their own situation. And you can frame this however you want, whether it be you're looking at your clients, investors, tenants, the marketplace, technology. But if you can take a look at your situation and identify what you consider to be the biggest risk. And for clarification, I'm not necessarily looking for an insurance related answer,
Hmm.
but if you're willing, I'd like to ask you, Manny Renteria, what is the biggest risk?
So the biggest risk that we run, as a nationwide consultancy, and myself personally as a consultant, that has a phone with over 1,000 clients in it that call me, every other day, is not meeting the performance, right? So I've made this mistake, when I first started consulting in the consulting business, signing agreements on behalf of service providers. So I would be the in between the service provider and the customer. And so in this agreement, I'm the one presenting this agreement to the customer and saying, hey, these are all the benefits of doing solar with my service provider. Um, and so in these agreements, it's not, it hasn't been a standard to have a performance guarantee. And that, I think, is the biggest ticket item for me, for my customer, and and even for the service provider, is to have that. Because now, without that, I cannot sell anybody's product. I cannot promote or sign anybody's agreements unless there's that performance guarantee, which covers me and it covers my client in this case. And what that is really simple. If your system is out there and it's producing power, but the power that it's supposed to be producing, let's say I presented you with a proposal that says, hey, this system is supposed to produce 10,000 kilowatt hours every month. Okay, and for the first year, multiply it by 12, that's 120 or whatever that is, right? So they sign up based on the fact that you showed them, a performance estimate on the proposal that they signed, and then the agreement didn't really have any performance guarantees. Now what happens is, a year later, when this system underperforms significantly, and your customer ends up with a system that doesn't produce or meet their needs, and on top of that, now they have a huge utility bill. Why? Because all the power that they didn't produce is now coming from the utility, and now they have this extra bill on top of whatever, if they're financing, now they have two bills. And so what ends up happening is, I have to go and explain why the system is underperforming, or whether or not they need more panels. And I'm stuck in between, explaining to the customer, hey, your system didn't produce because these trees are still in the way or something like that. So it's really, really important that a performance guarantee is set in place by any service provider, and that performance guarantee has some sort of monetary compensation in the event that the system underperforms in a certain year or every 2 years. And typically, what a performance guarantee says, every 2 years, if the accumulated power doesn't equate to this much, you get reimbursed at this rate. And so that, to me, now is one of the biggest risks that I've had moving forward. And so now I always look for that in service providers, to give me that performance guarantee. Otherwise, I'm out there, exposing myself and my company as as being untrue, or just un I don't know, just not trained, I guess.
Well, no, that's from a consumer standpoint, anybody, if you're making a big investment and it's based on future savings and performance,
Yeah.
yeah, I would think that would be pretty critical. At least, for make the thing work as far as monetarily.
Yeah.
You're investing in it with an expectation of payoff. So I get it. Manny, where can the listeners go if they'd like to learn more or connect with you?
So on my Instagram, most people are on Instagram. You can find me as the Solar Plug, at the Solar Plug. And in my bio, I have a link tree to various consulting sites, or there's Calendly links, there's links to testimonials, there's links to my LinkedIn. I'm on LinkedIn as well. I'm pretty much on all these platforms. My company is oneupsolar.com, so you can reach me there. My face usually pops up at the bottom of the website asking if you need any help. so,
Cool.
so yeah, you can find us there, or you can shoot me an email. My email is manny@oneupsolar.com, and that's the number one.
Got it. One Up Solar.
Yep.
All right. Well, hey, Manny, I want to say thanks for taking the time today. I've enjoyed our talk, learned a lot about solar, and
Thanks,
I
Jared.
look
I
forward
hope so.
to doing it again soon.
Hey, well, thanks for having me on here, and to all the listeners on Darren's radio station. I really hope you guys, if you own commercial real estate or are thinking about owning or a tenant, definitely look at the possibility. Um, all that we require, that anybody requires to give you a full analysis, is your utility bill. So if pulling your utility bill out of your mailbox and sending it over is too much to know, then
Right. Probably not a good prospect, but
yeah.
no, that's awesome. Uh, thanks again. And for our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Networks, CRE PN Radio.